Everyone, welcome to Market Insight for the week of January 8th through the 12th. Hope everybody had a good holiday and a good break from trading, and you enjoyed holidays with your family if you did enjoy the holidays. Anyway, starting with our top-down approach, here's the monthly chart. Monthly is in an obvious pullback here after reaching the all-time highs of 48.0825 and actually making new all-time highs at 48.41 and change if I recall correctly. Slight new highs in December last month. So overall, we can see the monthly chart remains bullish, right? This time frame has a nice uptrend, higher highs, higher lows, going up, well contained within the uptrend channel and well defined within that channel. So we see well-defined support around the 46.34 level. This level actually goes all the way back to the early spring of 2022. Late winter of 2022, that's February, March, and April there, those 3 months, where it hit that high. So it became resistance there, and that's where we started to see the big down move occur. So it was important resistance, right? The big down move into the summer of 2022 and into 2023. And then so we came up to this level again this past July and did it. And it became resistance and turned the market down from there. So old resistance like this is likely to turn into support when we've been making higher highs and higher lows as we've been doing. And then we approach that old support from above as we're doing here. So we would anticipate that support to be fairly strong, right? But in assessing the monthly chart, one thing to note though, these two almost vertical, well really vertical months of November and December, right? The market may feel a need to go and test deeper than 46.34. There was a fair amount of supply coming down below 46.34 on the way to the October lows down here of 41.22. So it wouldn't be a surprise to dip underneath that old resistance to test for that supply somewhere down in there. So we'll keep that in mind over the next few weeks as the down move develops and eventually matures. But let's turn to the weekly. We'll see that in a little bit more clarity as we go to the lower time frames. So on the weekly, we see the market break out of that resistance level 4 weeks ago, right? The 34.50 level, right in here. It breaks out of there, and it does so on nice spread, good firm spread, closing on the highs, firm close, and strong volume coming out of there. Quite bullish, right? The next week, though, we run into the all-time highs of 48.08. And we see some shortening of the thrust, suggesting, and again, on pretty good volume, suggesting at least some profit taking, if not some supply, around the all-time highs. And then the week before last in here, Christmas week, shows clear no demand at a key resistance area, right? Which also has confluence. We have supply line, and we have resistance, the all-time highs. So pretty important confluence area that we see up in here, and we see no demand up there. So sellers stepped in, seeing this, and sold the market down as we would anticipate and as we see unfold in here. So I note the increased volume, comparatively widespread, compared to the last couple of up weeks here. This down week is wider in spread and certainly more in volume compared certainly to the last week. Also, the weekly is breaking its supply line. I'm sorry, its demand line. And so all of this says that sellers have the upper hand at the moment, right? Even though overall we're bullish, at the moment sellers have the upper hand. This is the way the markets work, the ebb and flow of the markets. So let's take a look at the daily and see what we see here. On the daily, the key levels are all laid out. Here's the all-time high of 48.08, which we go up a little bit higher, and we put that level of 48.4150 in. We also have the 46.34 level laid out, and then the gap identified at 46.96, and other local support as well in there. So tape reading this from the top, we see no demand at the highs here. The blue or the cyan bars are a little paint bar study I put on this chart. These are NR 6 days, Toby Crable's NR 6 days, the narrowest range of the past 6 days. And the red or the magenta are inside days that inside the prior day, right? So inside the high or low of the prior day, and also the narrowest range of the past 4 days. So both can be useful indicators depending on the market context. And here, these NR 6 days set up at the top of resistance at the old all-time highs and in the confluence that we just described on the weekly. And so that reflects no demand at the highs and in an important context, right? And then the last day of 2023 saw the first indication of sellers coming in. Price drops below the 48.08 level. And does rally back up to close above it, but the close is mid-range, right? And note the increased volume. 1, 2, 3, 4, 5, right here on this day, that we've got increased volume. Now, had that been buying, we should have seen maybe new highs or at least testing the 48.41 level, going back up to that level, right? And closing firm. But instead we don't. We close down below that. We see supply coming in. And so the combination of the NR 6 days and followed by a poor close on increased volume says demand is spent, and sellers notice the spent demand and they're starting to take action. We see the transition here from no demand to supply starting to come in. Then the first trading day of the new year, we see supply enter. Wider spread down, poor close, breaking the demand line, or coming right to the demand line and breaking it, and doing so on increased volume, okay, and coming down below the prior day. So the next day shows sellers show sustained volume again, and sellers pushing the market down in a poor close. But we do see a little shortening of the thrust, which would be expected as we approach this local support area here of 47.43, and price stops there. So we could expect a bit of a rally, although the 47.43 support held and could spark a rally. We see from the daily that we did get a rally, but it was only intraday, and it didn't get very far before turning back down and actually closing below the 47.43 level, below that support, and obviously bearish. And then on Friday, the last day on the chart, we approach the bottom of the gap area down here at 46.96. Don't quite get all the way down there before rallying to close back level with Thursday, right? Thursday's close. So some buying's coming in on the daily just ahead of support. Not a surprise, right? But overall, this still looks to me to be fairly weak. Let's take a quick look at the major indices before we come back, and then we'll circle back to the daily and highlight the levels for the coming week. So here's the major indices, the S&Ps above, the Dow in the middle, and then the NASDAQ on the lower chart. So all three markets are in a corrective phase. That's pretty obvious. The Dow remains the leader. It's having difficulty coming down compared to the other two markets, right? So it's stronger. And the NAS has broken down below its local supports here compared to the others, and well, the Dow and the S&Ps, but the Dow is clearly the weaker of the three levels here. And all three levels have good support just below these levels. So in general, we're in a corrective phase with the NAS being weaker, the Dow being stronger, but all three are also continue to be bullish, though we can go a little bit lower. So let's go back to the daily and see what we might see there. So although we have a little demand showing up here on Friday, and this could spark a rally, I don't see a lot of demand here at this point, unless we see strong demand come in early next week. You know, maybe we dip into this 96 area, find no real supply down there, and demand, you know, starts roaring back. Great. That if that happens, then, you know, we want to look towards retesting the new all-time highs here of 48, 41, if not going beyond that. But until we see that, the odds favor further downside, and that's what I'm going to continue to go with here. So early next week on Monday, watch for resistance around 47.50 area, maybe 55, kind of around the highs of Friday. If that and if that breaks, then going up to 47.90. That's the top of the January 3rd bar, which is right here. And that's where the supply started to really, 1, 2, 3, yeah, we had good supply coming in there. So that would be the line of resistance. We start getting up above there and we're likely to continue higher. So that should be good resistance. So 47.50, 55 area, then up to 47.90, 91, I think this high might be here. So assuming we break the support at 46.96 3/4, then we look for the close of the gap at 50, 46.50, and then down to the key support of 46.34. So that's what I'm seeing here. We may see a little bit of a rally, but I'm not anticipating much of one to occur. Let's erase this and do this properly. So a little bit of a rally, then maybe push down into 46.35 before we start heading back on up. We'll see if that all develops, but we have our levels and we know what we can expect at those areas. So for next week, we have deep practice on not Tuesday, on Thursday. Sorry, I made a mistake there. That is incorrect. It should be Thursday, January 11th at 8 p.m., our normal time. So I'll see you at our normal time next Thursday at 8 o'clock. Thanks, everyone. Take care. Bye-bye.